and the volatility for the market continues. Yesterday was no different. After the breach of that 23,800 print, we finally recovered and bounced back from there, made it back to that 23,000 mark when it came to the Nifty, and 22,800, I beg your pardon, made it back to that 23,000 print finally towards the dying minutes of trade, propelled higher by pharma. That was one sector which was really rearing to go. There was cement, oil and gas, some of the financials which also held out smartly. So good recovery is what we had at our hands. But let's talk about what's happening within the global markets and what the setup there is looking like, because you've got the US futures rising a little bit, the post-holiday trading, that is. Oil has sort of steadied ahead of the Russia-Ukraine peace talks, which are slated. Remember, Wall Street was shut for President's Day. And what I'm talking about is just the pre-open rates. And stability in crude, I think that's one big factor that India perhaps needs to be focusing in on.
See, Aisha, no news sometimes is good news, and there is no news from Wall Street. I mean, because of the long weekend or the holiday effect, there is no new news. But in terms of a trend, the trend is that US equities are doing okay. Dollar is certainly looking toppy. What was closer to 110, 109 plus is now closer to 107. Third, the US 10-year paper has also stopped rising. And fourth, directionally, Brent is down. We are much lower than what we were, let's say, same time last year. So the base effect of the dollar advantage, I think, would start kicking in. So I would say status quo from the global market. No news sometimes is good news. Last 2 weeks were all about tariff. Thankfully, this week there is nothing large which in a sense markets would really latch on to. So sometimes status quo is also good, and I think this is a status quo where I would be more constructive in terms of the global, in terms of finding the cues. Crude is down, dollar is not moving up, you're not getting anything large in terms of a corporate development negative on the global side. So I would say globally status quo, no news is good news, and I would look at again more positives rather than negatives.
Okay, that's what the construct is looking like. For us, though, we managed to snap that 8-day losing streak. Like I said, we recovered quite nicely from those sub 22,800 prints. And by the way, we'll get our chartists, of course, as well soon to talk about the significance of the fact that we've tested 22,800 time and again and bounced back from there. Pharma, like I said, that was the top sectoral winner. IT was the top drag, and energy has also managed to snap its 7-day losing streak. For our markets, I mean, it's a no-brainer really. The construct is looking weak. I think the bigger question is closer to expiry now. Are we approaching nearer to the bottom, or is there more pain in space?
So Aisha, there is good and there is bad both, and depending on your approach. Now, you can argue back and say, okay, folks, this 22,800, which everybody is in a sense really eyeing on a daily basis, that so far has held on Friday, on Monday. And that is not bad. But will it continue to hold on? And rather than really, getting into mid and small cap stocks, my point is that first let the large cap stocks stabilize. If large cap stocks stay stabilized in the next couple of days, then the attempt towards small and mid cap stocks would move. So for me, the primary driving factor this week would be more like a technical level, at least in the immediate short term, which would tell you that where the market is finding support. I mean, there is no point in me even going to value in small and mid cap stocks when we don't know large cap stocks where they are headed. You just been managed, if you're a long trader, you just know that you're dangerously going to that level, and from there you're bouncing back. If you're able to hold on to that level for next couple of days, then markets would breathe a sigh of relief. So let's directionally first figure out technically where large cap stocks are likely to stabilize. फिर बात करेंगे small and mid cap की, because there is no point in getting into small and mid cap stocks, because when there's a fire in the house, everybody's like to run from that same door, and the problem is there is only one door, and then there is a rush which happens, and that is happening in the small and mid cap stocks. I mean, when there's a carnival, everybody wanted to buy. Now it's almost like feeling of a mortuary. So that's how it is. पहले large cap को देखते हैं, where they stabilize, then you make a view. There's no point in trying to catch a falling line fashion small and mid cap stocks.
Yeah, and I think what perhaps can give confidence, and I don't know when it's going to happen, the FII is turning biased, because on a consistent basis, on a daily basis, we've been seeing, humongous amount of selling. Even yesterday was no different. 4,700 crore rupees.
Yeah, that's the puzzle. And every time we thought that, okay, it's the dollar index, chalo, wo bhi theek ho gaya. Then we thought rupee has to stabilize. That also has happened. Then we said oil has to come down. That has also happened. But FIs have not come back. Because flows back into emerging markets are improving. That is what data is saying. But the sad bit for us, or the unfortunate bit for us, is that they've gone to China. And there's a long list of reasons why they are actually going back to China. For me, I think what I would like to point out is the construct of brokerage notes now. And whether it is Morgan Stanley or Citi, I was just checking in the morning, they're sounding bullish now. And they've been, for the better part of 2024, Citi was quite, they were not very happy with the valuations, let me put it this way. Rhythm and his team, they are now really making a strong case, which is that, guys, the markets are ignoring good news. Let's look at good news. And there is a lot of good news. Geopolitics, dollar index, earnings, consumption boost, and valuations. So two big powerful brokerages who understand trends, who pretty much know which way the interplay of valuations and flows would move. They're sticking their neck out and they've become constructive on India. So at least you would make a case that now markets are not expensive. I mean, it is not, the valuation in large cap stocks are no longer a risk if you are thinking long term. The problem is that in the short term, because of FI and the technicals, the collateral damage could be much more that nobody knows. But if you're buying from a long-term horizon at these levels into select large cap stocks, I think you should expect double-digit returns in next to 18 months. I think that is empirically evident looking at the tone and the tonality of the brokerages and what they're indicating to the client. So that's for me the first real positive indication where the contra buyers will start coming back. See, Aisha, if markets get cheap, somebody will come.
Yeah, of course.
They would say, okay, we lose 10%, but we know that from these levels, we will make 20%. So I think that crowd will start coming back. When will that crowd come back? How aggressively will that crowd come back? I don't know. Because for that contra crowd to start coming back now the valuation appeal which was missing for a long, long time, I think is decent.